Jeff Brown has a new presentation called The Tesla Shock of 2025, and he claims he knows a $50 stock with 25,000% potential. I reveal it in this video for free so you don't have to buy his newsletter. Just keep in mind, no paid or proprietary info is given away here, and it's all guesswork based on clues in Jeff's publicly available sales presentation. Let's quickly look at Jeff Brown's recent stock picks to see how good he is. He recommended Grayscale Ethereum Trust in September 2021, and it hasn't performed well since. In November 2021, Jeff recommended Schrödinger, claiming it was the convergence of AI and medicine. However, the stock hasn't done well. He recommended AMD in October 2023, and the stock has been up and down, and right now it's slightly up. In January 2025, Jeff recommended Micron, and the stock is up a pretty good amount. Let's shift back to the new teaser from Brown and figure out the stock he's pitching. Here's the headline. Mainstream experts think Tesla is done for, but they're about to get blindsided yet again. Because July 23rd, Elon's latest AI breakthrough is set to take AI out of our computer screens and manifest a 250x AI boom here in the real world. And Brown is coming forward to reveal what he calls the $25 trillion Tesla story no one is telling you. A story that starts with a shocking AI brain breakthrough buried inside Tesla's AI division. And according to Brown, we're looking at potentially the biggest tech revolution in history. And this opportunity has the potential to grow 25,000%, and you can get started for just $50. This is a long presentation from Brown, so I'll spare you most of the details. But Brown is alluding to humanoid robots, particularly Tesla's robot called Optimus. He calls this manifested AI. Brown is constantly referencing July 23rd as a catalyst for his prediction. Here's what Brown says about that date. On July 23rd, I believe Elon will announce his general-purpose autonomous robot, the Optimus Gen 3, is now entering mass production. Optimus Gen 3 is Tesla's latest version of its humanoid robot, unveiled in early 2024. Compared to earlier prototypes, Gen 3 features a sleeker, more human-like design with major upgrades in mobility, dexterity, and balance. It can now walk more naturally, manipulate delicate objects with its hands, and perform a range of tasks with greater precision. Tesla says the robot is powered by its in-house AI and is designed to eventually take on repetitive or dangerous jobs in factories and homes. Brown goes on to say this about the robots. Elon's proven that his AI brain solution is the answer to the one roadblock that's held back robotics for decades. Musk and his team have solved the reality gap by inventing a fully autonomous AI for robotics. And according to Brown, Elon has proven he can exponentially increase manufacturing demand, like he did with Teslas in the past. So Brown thinks Elon will start pumping these robots out fast despite them not being in production yet. Eventually, Brown starts talking about the company he wants you to invest in to benefit from the robotics trend. He says, and if you want to become wealthy from this new 25,000% growth market, then I believe the best way to play it is with the company I'm recommending inside Elon's 25,000% secret weapon, the one stock that makes Tesla's robotic revolution possible. And then he goes on to say, because thanks to this company's vital technology for the robotics industry, they've acquired partnerships with Tesla, Volkswagen, Hyundai, NIO, and so many more major robotic players. Meanwhile, this company is still virtually unheard of, as this stock is 168 times smaller than Nvidia. And then Jeff says, without this company's proprietary imaging systems, general-purpose autonomous robots would effectively be blind. Then Brown says, I believe they're the robotics industry's best eyesight supplier by a country mile, because right now this company's advanced imaging sensors are helping power the vision systems in Tesla's self-driving cars. Additionally, Jeff says, best of all, hardly anyone on Wall Street is even paying attention to them. Out of all the big banks like JP Morgan, Wells Fargo, Citadel, and so on, only 2 analysts from Goldman Sachs and Citibank are giving this company a screaming buy rating. So here's a summary of the clues. The stock is $50. Partnerships with Tesla, Volkswagen, Hyundai, NIO, 168 times smaller than Nvidia, supplies image sensors to Tesla. Based on these clues, it's clear the stock being pitched is ON Semiconductor. They have a $50 stock, partnerships with all the companies mentioned, and they provide CMOS image sensors that are used in advanced driver assistance systems in Tesla. ON Semiconductor, now branded as onsemi, is a leading semiconductor company that designs and manufactures intelligent power and sensing technologies. The company plays a major role in enabling energy-efficient electronics, particularly in the automotive, industrial, and cloud power sectors. In the area of image sensing, onsemi is a major supplier of CMOS image sensors used in a wide range of applications, from advanced driver assistance systems in vehicles to industrial automation and surveillance. Their image sensors are known for high performance in low light, fast response times, and high dynamic range. These capabilities are critical for machine vision, robotics, and automotive safety systems where precise visual input is essential. Here are the top 10 things to know about onsemi, and after I'll tell you if I'd buy. onsemi posted Q1 2025 revenue of $1.45 billion and non-GAAP EPS of 0.55, topping estimates $1.41 billion and 0.52 EPS. Yet shares dropped approximately 8.5% in pre-market trading. That signals investor concern. Earnings alone aren't enough. Growth trajectory and market sentiment matter. Digging deeper into the numbers, the automotive segment, onsemi's largest, plunged approximately 26% sequentially and approximately 19% year over year. Since auto is their backbone, another slump could pressure margins and cash flow if EV demand or chip inventory issues persist. Balancing that, the company is emerging as a key silicon carbide supplier, gaining traction in EV and power markets, especially in China's EV boom. That market offers high growth upside, and success here could offset weakness in legacy auto chips. Adding to the positives, Q1 free cash flow surged 72% year over year to $455 million, and the company returned 66% of that through buybacks. Management's plan to deploy 100% of free cash flow into repurchases is supportive for shareholders, but it also adds pressure to keep that income stream flowing. However, not all trends are favorable. GAAP gross profit margin slid to 20.3% from approximately 45%, and non-GAAP margins also dropped despite cost controls. That steep decline suggests pressure from rising costs or weaker pricing power, something investors will want to monitor closely. In response to margin pressures, onsemi plans to cut approximately 2,400 jobs in 2025. While that could be beneficial for cost structure over time, it introduces execution risks. Layoffs can disrupt operations and impact morale if not managed carefully. Looking at strategic moves, onsemi has made several acquisitions, most notably a proposed deal for Allegro Microsystems, withdrawn in April, and the finalized acquisition of Qorvo's SiC JFET Tech in December 2024. These show bold ambition, though successful integration and long-term payoff remain uncertain. Meanwhile, the broader semiconductor industry is seeing some recovery. Global chip sales rose 2.5% month over month in April, driven by AI and data center demand. That macro tailwind supports onsemi's exposure in SiC, power, and sensor markets, even if consumer and auto sectors remain soft. From a geopolitical angle, onsemi stands to benefit from reshoring trends under the CHIPS Act, which pressures foundries like Global Foundries. Domestic supply chain support is a plus, but delays in grant rollouts or shifting US-China trade dynamics could influence competitive positioning. Finally, onsemi's diversified portfolio, spanning automotive, industrial, power management, sensors, image chips, and SiC, helps reduce revenue concentration risk. But long-term success still hinges on how well they balance cost control, capacity scaling, and R&D execution across all segments. Here are my thoughts. onsemi is well positioned in the automotive and EV industries, but unfortunately, that's not exactly a good thing right now. Auto chip revenue dropped approximately 26% quarter over quarter and around 19% year over year in Q1 2025. Since automotive makes up a significant 20% of the total revenue portion of onsemi's revenue, any prolonged EV slowdown or chip inventory glut could have a meaningful impact on the company's margins and growth outlook. That said, onsemi is also gaining traction in several high-growth industries like industrial automation and robotics. These sectors are widely expected to expand rapidly over the next decade. Industrial automation in particular is seeing strong global demand, driven by the need for smarter factories and more efficient manufacturing processes. onsemi's focus on power and sensing solutions positions it well to ride this trend, even if it takes time to fully materialize. Still, it's hard to say exactly when those emerging trends will start contributing in a meaningful way. That brings us to the buzz around humanoid robots, especially Tesla's Optimus. Personally, I don't share Jeff Brown's enthusiasm for this segment. Sure, robotics will grow, but humanoid robots? That's a tougher sell. Why would someone spend tens of thousands of dollars on one of these machines? Most people already have voice assistants like Alexa or Siri for basic interaction. Robotic lawnmowers and vacuums already handle common chores. So what's left? Maybe folding laundry or putting away dishes. But is that really worth $30,000? So from my perspective, I don't think Optimus will generate any meaningful revenue for onsemi in the near term. The broader robotics sector could still be a win, and onsemi should benefit from that longer term. But humanoid robots specifically seem like more hype than substance right now. As for the stock, I'm staying on the sidelines. The valuation isn't terrible, but the near-term setup doesn't look attractive. The EV and auto industries are slumping, chip demand is cyclical, and the competition is intense. For now, I'd rather watch from the sidelines and wait for a clearer turnaround signal. And from June 11th to July 4th, Seeking Alpha is offering their biggest discount ever on AlphaPick. As you probably know, AlphaPix is by far my favorite stock picking service, and they absolutely crush the market, almost tripling the market's returns over the last few years. For the next few weeks, they're offering a massive $100 discount on this incredible service, and you can access it by clicking the link in the description below this video. If you've been on the fence about trying AlphaPix, Now is the time to take advantage of this sale. AlphaPix puts you in the best position to succeed with stocks, and since inception, has consistently outperformed the market. So again, click the link in the description to get $100 off.